Thank you for joining today's webinar on the USDA Rural Development's Rural Energy for America program, or the REAP program. We are pleased to welcome USDA Rural Development's Brandon Hoffman, who is based out of Mount Vernon, Washington, and who will present on the REAP grant program. My name is Patrick Nugent. I'm the Executive Director of Solar Washington. I want to say special thanks to Jack Newman of Sazan Environmental Services and a Solar Washington board member for his logistical support in setting this up today. Thanks to the staff at Sazan for hosting us today. We are here at Sazan in downtown Seattle, where we are conducting the webinar. I want to welcome all of you throughout the state who are listening in today. Anticipate that this should last roughly 30 to 45 minutes. For those of you using the GoToMeeting interface, you can ask questions using the chat box. We will monitor the chat throughout the presentation. For those of you on the phone, you will be muted, but we will take questions at the conclusion of Brandon's presentation. Solar Washington is a 501c3 nonprofit educational organization which brings solar-related educational resources to industry and non-industry people alike throughout Washington. Our marquee event is the Washington State Solar Summit, which typically takes place each October and brings in industry personnel throughout the region. We rely on the support from our members and sponsors to make programs and events like this one today happen. If you are not a member, or if your company currently is not a sponsor, please consider supporting our organization. You can find more information at solarwa.org, solarwa.org. Finally, we want to plug the Pierce Conservation District's REAP Assistance Program with Spark Northwest. We will post additional links and files on our website after today's presentation, including an audio file. So this presentation is being recorded. So thank you all very much for participating today. And at this point, I'll hand it off to Brandon.
Great. Thanks, Patrick. And thanks to everyone who joined us today. We're going to, like Patrick said, I'm going to try and move through the bulk of this presentation in 20 minutes or so. Give us plenty of time for questions at the end of it. And my name is Brandon Hoffman. I work for USDA Rural Development. We're a federal agency that has the mission of facilitating economic development in rural areas. We do that through a variety of funding programs, loans and grants primarily. We do a lot of housing loans. We do loans to public bodies in rural areas. And I work for our business programs team. And our team is responsible for administering 4 or 5 different grant and loan programs focused on helping businesses in rural areas, including the Rural Energy for America program, or REAP for short. So today we're going to talk about, I'm going to outline some basics about REAP and hopefully give you folks an idea of basic eligibility, how it can be used, and when to suggest it to your clients, and what resources are out there to direct them to help with the application process. So the basics. REAP consists of grants and loans, loan guarantees. Actually, the bank would make a loan and my agency would guarantee a portion of it. Most people are interested in the grant side of things. The grants can be used to install renewable energy systems like solar and to make energy efficiency improvements, which I'll define a bit later. The grants are typically maxed out at 25% of the cost of the project. These are the basic things we're going to jump through today. Like I said, client eligibility, project eligibility. So who is eligible? What can we use the money for? Timing, how the application process works with your typical installation schedule, and then resources for application assistance. So we're going to talk first about who's eligible. What kind of businesses can receive this grant? There are 2 classes, 2 categories. You have rural small businesses, which 3 words, 3 different parts. Rural means you're in a community of less than 50,000 in population, or the metro areas associated with those large communities. I'll show you a map in a second, and that'll make that definition make a lot more sense. Small means you meet the SBA small business size standards, which are available on the web. They're sorted by NAICS code. They're typically in either a revenue maximum limit or an employee maximum. And you do need to include affiliates when you're figuring out if you're underneath that limit. And then generally they need to be a for-profit business. There are some small exceptions for things like electric co-ops, tribal corporations, that kind of thing. But generally speaking, it's basically limited to for-profit businesses. Nonprofits and public bodies generally aren't eligible. All right. Here's a map of the state. The areas that are not eligible are shaded. So you get a general idea of like what we're talking about. The entire Seattle metro area, Bellingham, Vancouver, Tri-Cities, Yakima, and Spokane generally aren't eligible anywhere within city limits. And some, and this is only for the rural small business category, by the way. And if you ever have a question about whether or not your client is in an eligible rural area, I would just recommend searching rural eligibility, USDA rural development. You'll end up on this site, or the link is listed right there below. And this is what it should look like. There's a rural business tab, and then click on the link that's listed with REAP. And you can just throw in an address, and it'll tell you if it's eligible or not. It's very quick. The other class of eligible applicants are agricultural producers. And this is exactly who you would think it is. These are individuals or entities that make most of their majority of their revenue from ag production. And in that case, there is no rural requirement. So regardless of where you are, if you're a farmer or a livestock raiser, the rural requirements don't apply. All right. So those are the two categories of eligible applicants or grantees. Now we're going to move on to what kind of projects are eligible. And there are two classes of eligible projects. Renewable energy systems, exactly what it sounds like. There's the big list. Typically, we see a lot of solar projects, and I imagine that's what most people here will be interested in. There's also, could you click back into the slide quick? There's also a different class of eligible projects called energy efficiency improvements. And there's some examples there. This might not be completely applicable to the audience, but if you have a client that's considering other ways of saving energy or electricity with their business, it's good to know that those kinds of projects also might be eligible for a REAP grant. It just has to either replace or improve the energy efficiency of something that's existing. So an existing piece of equipment, existing facility, and you can wrap up a lot of this stuff into one project, into one application. All right. As far as generally speaking, what's eligible as a cost, it's important to know that you need to, or your client needs to submit their application before incurring any costs in order to maintain the eligibility of those costs being reimbursed with that 25% grant. So we'll talk a little bit more about what that means for timing later, but just keep in mind the application has to be complete before your client incurs costs. Other items that are eligible in a typical solar project is the equipment itself, the installation fees, professional service fees, permits, licenses, all of that can be put together into the application as an eligible expense. And then you calculate the 25% grant based on the sum of all those expenses. Things that aren't eligible include residential energy projects. Remember, this is a program directed at rural businesses, not residential projects. Also ineligible are expenses that were incurred before the application, vehicles, application prep fees, and payments to folks that would have a conflict of interest. So if the owner of the business wants to do part of the work for some reason, that really isn't a problem. It just can't be included as part of the total expense on which the 25% grant is based on. All right. I mentioned before that residential projects are not eligible, that this is a program focused on rural businesses. Oftentimes we see, this is a typical scenario where we see a business and somebody's home are co-located. They're on the same piece of property or even in the same building. They maybe share a meter. That's okay. We can, in lots of instances, that's okay. We can make it work. But there's some math and some things to take into consideration. The important thing to keep in mind is that all of the energy that your solar system that you're installing generates needs to offset business use. And if 100% of what's being generated by the system is offsetting business use, there's no grant reduction. It's fine that the business and the house are co-located. If your system, so sizing is important, I guess I'm saying here. If the system is going to generate more electricity than the business uses, then we get to do some math. Basically, we reduce the grant proportionally. So I gave an example there of a system that generates 16,000 kilowatt hours, and the business is using 13,000, and the system costs $40,000. There's the math. You would divide 13 by 16,000, multiply that by 25%, that's a grant. Multiply that by the $40,000 cost, equals a total eligibility of 8,000 and some change. So basically, you've reduced their grant eligibility from 25% to around 20%, just because the business is not using all of the electricity that's being generated. And that's fine, and we can do that as long as the business is using the majority of the energy that's being calculated. I think the regulation technically says 51%, so can't be like 50 and a half. But yeah, just get in touch with me if you have any questions regarding this. And I think it's good to involve or start thinking about these calculations early on as you're considering different system sizes. And then evidence for this calculation needs to be included in the application. So we have to be able to follow the math one way or another. Often we see kind of inventories of business, equipment, electricity, or energy use, and then we see historical overall property electricity use, so we can kind of go back and see the math and the ratio for ourselves. Yeah, there are resources out there that we'll talk about in a little bit, organizations that have been helping folks put together applications and make these calculations. All right. It's also important I should mention that some of our applications are based on a given electricity use that is projected based on the business buying a certain piece of equipment or building a certain facility. That can be done. We can do that. But we're not going to disperse the grant until we have proof that they bought that piece of equipment or built that facility. Just some specifics about sizes of grant. Minimum request is $2,500, and the maximum is either 25% of the eligible cost or $500,000. We typically don't get applications that big because Washington State generally gets an allocation. It's federal money, but it's allocated by state. In a typical fiscal year, Washington State gets maybe $600,000 for the REAP program. So a huge project like that would just completely wipe us out. On the environmental side, I think I should mention that if you're going to break ground, get in touch with us beforehand, and we'll talk about what needs to be done. That's all I'm going to say, since I imagine a majority of these solar installations are on the roof of a facility or ground mounted. I mentioned before that in addition to the grant component of REAP, there's also a guaranteed loan component. And basically the idea is a bank would make a loan to the same type of eligible business for the same types of projects we've been talking about. And my agency would guarantee a portion of that. up to 85%. So basically, if the borrower isn't able to pay the lender back, USDA Rural Development covers 85 or 80 or whatever it is % of that loss. And the idea is to encourage lending for these types of projects in rural areas by mitigating some of the risk to lenders. Typically, we only see these on large projects, so like solar farms in the hundreds of thousands or $1 million range. We also see them on energy efficiency projects, since they're kind of broad in what you can do with that money. Basically, there can be any improvements or replacements to equipment, as long as it's saving electricity or energy. So we've done things like replacing ski lifts on ski hills. So if you're interested, if you have a client that's interested in that kind of thing, feel free to get in touch with me, and I can maybe direct them or give them some advice about how to approach lenders. But the client would primarily be working with the lender, and the lender would turn around and work with me on the guarantee portion of that.
So eligibility requirements are broader?
They're exactly the same.
Exactly the same.
So question in the room was, are eligibility requirements on the guaranteed loan the same as the grant? And they, generally speaking, are.
So a ski resort being in a rural locations would qualify.
Yes. The ski resort example I gave had to be a for-profit business. It had to meet the SBA size standards, and it had to be in a rural location. All right. Application process. Not that much of this is relevant to most of the audience out there. This is stuff that either the client or whoever's helping them assemble the application is primarily going to have to worry about. But I think it's important to keep in mind for you folks that we are going to want a copy of your bid or your proposal for the system as part of the application. Right. Resources out there. Patrick mentioned a couple of them already, but Spark Northwest has and I've kind of listed contact folks or the best way to get in touch with them. But Spark Northwest, Pierce Conservation, Snohomish Conservation, and then my agency. All of us kind of exist in an ecosystem of helping rural businesses put together these applications, because REEF's not that bad from my perspective as far as putting the application together goes, but my frame of reference is different than most people's. It's paperwork, and not all of it is makes instinctual sense when you read the fields. So yeah, there are resources to direct your client to if they're concerned about the paperwork involved with putting together an application. All right. I mentioned before timing and how the grant schedule works together with your installation schedule. The important thing to remember here is that the application has to be submitted to me or one of the other local rural development offices, and a specialist working there needs to confirm that it's complete before expenses can be incurred on the project. And usually that includes even putting down a deposit on the project. And we turn around those, it's basically a letter that says the application is complete. We can do that in a day or two. So that's not a big deal there. So keep that in mind. But the timeline, as I see it from probably most of your perspectives, is that you identify clients that might fit these eligibility criteria and have an eligible project, perhaps connect them to some of the resources we've talked about, submit your application. I or my colleagues will confirm it's complete, and then you can accept payment. And if your client is not waiting on the REAP grant, if they want to install right away, regardless of whether or not they get it, go for it. You can at that point. Any of those expenses are reimbursable if they get a REAP grant. After that, my agency, well, we accept applications until a deadline. The next one is March 31st, and typically there was one in October as well. Sometimes the dates move around a little bit from fiscal year to fiscal year, but we accept applications until that date, then we cut it off, score all of the ones that we have on hand, and I'll talk a little bit more about the scoring criteria. And then we put them in a big list by sending score and fund them until we run out of money. And then we notify everyone. And if your client was waiting to hear whether or not they got a grant, they'll know at that point. Typically, that's a month and a half after the deadline. So this year, we'd be talking about the middle of May. And then they should get in touch with you and you can start installation. After the project's installed, it needs to be operational for 30 days. And I need some proof that it was complete. Typically, that's a paid in full invoice. And I will probably send you, the contractors, 3 or 4 forms, and I will provide an explanation document of what you're signing. Basically, it says you comply with federal laws regarding non-discrimination, that kind of thing, and you're not debarred from working with the federal government, and that the project is done. And we can do all of that by email. And I'm available if you have questions. And then disperse the grant, and that's it. I mentioned the deadlines before. The deadlines depend on the size of the grant request. So small ones, which are under 20,000 grant requests, have a separate deadline that only they are eligible for, and that's in the fall. Deadline's typically October 31st. And then the one in the spring, this year is March 31st. You can submit grants of any size application. And we accept guaranteed applications anytime. And you don't have to wait until right before the deadline, or your client doesn't. I prefer if they didn't. Scoring considerations. Just basic stuff that I don't think a lot of folks out there are designing their project around scoring. It's based on the needs of the business and, the physical space that's available, that kind of thing. But in case you're curious, the percent of energy use offset, more is better, payback time, quicker is better, and they get points for being a first-time REAP applicant, and there's priority points for being a part of a socially disadvantaged group or a veteran. It's basic stuff like that. And there's contact information. I mentioned I have colleagues scattered all over the state. We kind of have a regional approach to not just REAP, but all of the funding programs that we administer for businesses. I cover the 6 counties in the northwest part of the state. We have some folks in Olympia that cover the southwest part of the state, and 2 in Yakima that cover the eastern part of the state. We actually have a new person in Wenatchee whose name I haven't added here, but either way, if you contact any of us, we can get you to the right place. And that's it. Oh, we have some questions. All right. Do Airbnb electricity count? So is an Airbnb an eligible business versus it being residential? It's challenging. If it's part of the same structure, you do have to find a way to figure out how much electricity each uses, which might be challenging if they're on the same meter. If it's a whole house that you're renting out, like a rental property, like an apartment building.
Some clarification here.
Okay.
It's a farm.
It's a farm stay.
Almost like a bed and breakfast.
Right. It's challenging because you could do a REAP project for a hotel, but you couldn't really do one for an apartment building. It's that line between what's a business, what's a short-term stay, and what is, residential, what's a long-term rental. Airbnb, if the owner doesn't live there and it's only short-term stays, you'd probably be okay. But it is a tricky gray area. So I would suggest getting in touch with me with the specifics of that client before you encourage them to apply, or have them do that. Next question. How long after approval of REAP grant funds for project does the host have to install the system? When are funds distributed? What does PTO stand for, guys? Do you know? Okay, we'll start, and hopefully we get some clarification from Jim. Permission to operate from utility. Okay, the system has to be operational for 30 days before I can distribute the grant funds. And I mentioned there are some forms that need to be signed, so typically we do those forms in that 30-day window. As soon as we hit 30 days, I can disperse the grant. The client puts down a deposit but hasn't incurred costs on equipment, labor. Are they still eligible? Generally, we view putting down a deposit as incurring an expense. You could refund it to them. They could put in their application and do it over again. Funds dispersed to the contractor applicant. So this is an important clarification. Think of REAP as a reimbursement grant. So the client, the business, needs to pay you guys in full, and we need a paid in full invoice as proof that that was done. Then we can reimburse the business for 25% of that eligible cost. Back to the application process slide. Else is listed after energy assessment.
This is the correct slide.
Where is energy assessment?
This is project timeline.
Okay, can you scroll back?
Sure.
There you go.
Resources.
We're trying to find the right slide that Ann's looking for.
And just to let all you all know that we will post the slides on Solar Washington's website. So I will inform you of where to find that on our website.
I think we found it. There we go. So that's a summary of the basic parts of an application process. I mentioned the small business thing. They have to send us financials via tax returns to prove that they're small. The proposal, an energy assessment, breaking down residential versus business use if that's necessary. There's some federal forms. If you're breaking ground, and we've discussed some kind of environmental requirements, that'll be part of the application. And your client or the business is responsible for packaging all that up, signing it, and getting it over to me and telling me they want a letter that says their app is complete. All right. Small farm startup, contact for application assistance in Spokane. I would use either, why don't you contact Randy there out of Yakima. All right, for the energy assessment, is that from the utility, an outside group, or a self-assessment? Typically, that is from an outside group. I mentioned Spark Northwest and the conservation districts. There's a little bit of a definitional thing about energy assessment versus audit. Depending on the application size and type, there are different requirements about proving the kind of numbers we talked about before, about how much energy the business is using. So depending on how strict or how detailed that information needs to be, will kind of inform who needs to put it together. On your typical small application for a solar project, often folks like Spark Northwest or the conservation districts will help the applicant do that, looking at historical bills, if necessary, breaking out the business use versus residential, that kind of thing. Partner with any companies in Southwest Washington, Clark County. We don't partner with anyone specifically. I mean, any business that meets the requirements here are eligible to apply, and any solar contractor that's doing this kind of work for eligible businesses can refer their clients over to us.
Thanks everyone for using the chat function, and you can add any additional comments you may have. We're going to unmute the phone attendees for a moment. So if you have a question, please introduce yourself, and we'll try to manage the chaos here for a second.
Hello. How long after approval in May does the host have to install the system?
Could you repeat that? I'm sorry.
How long after a project is approved in May does the farm have to install the system?
Okay. So after, once we sign all the documents that kind of obligate money to a project, that business has 2 years to use the money. So that gives you time in case something doesn't quite work out right. Something falls through, the other financing falls through, that kind of thing. 2 years.
Okay, thanks. And then my other question was when the funds are dispersed to the customer, you said 30 days of operation and some forms are filled out. But for me to set expectations to a customer, like they're installed on September 1st, when do they have a check in hand that they can walk to the bank with?
Probably 45 days after that. Takes, if they're on top of things about their forms and you are as a contractor, we should have everything we need in 30 days, and then it's just a matter of dispersing the money. And I would leave 2 weeks for that, so that gets you roughly to 45 days. Question?
Great, thanks.
Thank you, Brandon. This is a great presentation, and we really appreciate you coming to Sazan Environmental Services Office to share this information. This is Jack with Sazan. I have a question about tribal eligibility. For tribal organizations, we've seen some questions come up around eligible businesses to take advantage of the REAP grants, and seen challenges with businesses that administer a casino where they're exceeding the revenue thresholds. Do you have any guidance for Washington tribes on best practices or lessons learned that you've seen for the application process and successfully receiving a grant?
Yeah, there's a specific section of some law out there that kind of specifies how tribes can create corporations underneath the overall tribal government umbrella, where the business operates and acts like a business and kind of has independent leadership. I don't have the specific reference, but I can get it to you. The important thing to keep in mind is it still needs to meet those revenue requirements. It still needs to be in a rural area unless it's an ag producer. And generally speaking, the organization or the business needs to operate like a business and have some independence from the overall tribal government. And eventually we'll get to the point where usually they just send me some kind of organizational documents, some kind of, typically like the articles or in bylaws or similar, and we can just go through there and make sure that that they have the necessary independence before we get too far down the road. Does that help?
That does. And just one follow-on question is, if a tribal organization establishes a corporation to apply for the grant, how do you verify their association to the meter where they're claiming the energy savings? So do they have to actually be a resident of the premise where the utility billing data is being submitted, or could a business that's based in one building apply for a grant for solar on another building, or does it have to be their building?
They don't. I mean, they don't necessarily have to. The entity that's applying for the grant doesn't necessarily have to own the building.
Okay.
They should be operating out of it, and they should be using the electricity, or the electricity being generated should be offsetting their use in that building. But we have situations like you can lease a building, and that's fine. You don't have to own it as the applicant. So similar thing applies there. I don't know. There are tricky, legal organizational reasons for one entity to own the building and another to operate out of it. We can work through most of that, and it may involve just kind of creating a paper trail back to common ownership or control when the entity that owns and operates are different.
Thank you.
Does that make sense? Okay. Another question. Carlos, can anyone install a solar system or does it have to be done by a contractor? I mentioned before that we can't pay grantees. We can't reimburse grantees for their own work. So if you as the business owner want to install solar and you have the necessary qualifications to do it, that's a big part or point. Or maybe you have somebody that works for a solar company that's willing to volunteer their time and help you out, something like that. That's okay, but we can't reimburse you as the grantee for your time. The grant can cover, materials and equipment and that kind of thing, but we definitely want to see that the person installing it has the necessary qualifications to do it. What type of biomass projects are eligible? I'm not an expert on the different types of biomass projects there are out there. Generally speaking, as long as they're producing electricity that's offsetting use by the owner of it, that's okay. Maybe you have okay.
I got a separate question.
Okay. Well, let me get to Shane quick. Mentioned applicants are scored and listed in descending order. What happens if multiple applicants have the same score and funds are close to being depleted? Generally doesn't happen. We get into the 2 decimal place on scores, so it's generally not an issue. Sometimes we do get to the bottom of the list and we don't have enough money to fund the last application in full. So we then talk to them and say, are you willing to accept a partial grant? And if they aren't, then we go to the next one down the list and keep moving down until someone's willing to accept what we have left. We have a question.
Yeah, it's related to that one. Can you go through sort of the nuances of the scoring and kind of what you prioritize and how you sort of judge the relative quality of the applicants?
Okay. Question in the room was just more about scoring and kind of how it works and what we're looking for, what the criteria is. Generally speaking, it has nothing to do with the quality of the application. We're not looking for a flowery description of the project or something like that, or a great narrative. We look at the application, and it needs to be complete and provide all the information we need, and they need to be eligible on a project basis, and the business needs to be eligible, and the installers need to have the correct qualifications, and that's all an eligibility criteria and consideration. You either are eligible or not. When it comes to scoring, then it's very set in stone and objective. The agency employees that are reviewing and scoring these things have little to no impact on the score that you get. It's pretty much, how much energy are you generating versus what the business uses? There's certain tiers. It's like, I don't have the numbers on me exactly, but it's like, if you're from 25% down, that's one score. 25 to 75, that's a better score. 75 plus, that's a better score. The payback time, and payback time set in tiers as well. If it's under 20, you get 5 points, for example. Less than 15, you get 10. Less than 10 years, you get 15 points. It's that kind of thing.
So
it's very objective.
I forget how many there were, but it's those handful of criteria is basically the basis.
Yes.
After you meet eligibility.
Yep.
And then it's first come, first served.
It's, as far as the question was, is it first come, first serve? We save up. It's not. We wait until the deadline. We collect applications until we hit a deadline. Then we score them all. Then it's based on who scores the highest. Okay. Thank you.
Brendan, do you have time for an additional question or two?
Yeah, absolutely.
How about we open it up to the folks on the phone? So any folks on the phone, this is your opportunity to ask Brandon a question. You'll be unmuted. Any questions from the folks calling in? Going once, going twice.
I've got one.
Okay.
Let's say you have a farm with several pumps at different locations. Can you aggregate the collective power usage of the farm even if there's a solar array only at one location of the meters?
I think so. Yeah. We do this in, well, would the pumps be, are we installing a solar system to offset the energy used by the pumps that are scattered around a piece of property?
Yeah, let's say you had 4 pumps that use 10,000 kilowatt hours a year, and they're all like, a mile or 2 apart from each other on a big farm. But then at the main pump, they want to install a solar array that makes 40,000 kilowatt hours a year. Can we write the grant for the full 40,000 and kind of aggregate those disparate pumps?
Yeah, as far as I'm concerned, I would be interested in energy use from the whole business. And it's even easier if it's all on one piece of property. So you can stick with the energy use from all those pumps together and any other, equipment that the business uses that uses electricity.
Any other questions from those calling in? Okay, we have additional question from the chat box.
All right. Per SBA designation revenue and employees are the metric. Yes. Generally speaking, it's one or the other, depending on your NAICS code. NAICS, it's just the different types of industries that you'd fall into. SBA, if you search SBA small business definition, you'll find their most recent limits on their website. All right. Tax rebates are available for solar at 26%. How does that work with the grants or credits rather? It doesn't have much impact. We don't take the credit or rebate into consideration when we're thinking about how much of the cost is eligible. We don't subtract that 26% from the cost and then figure out the grant eligibility. We don't worry about it. It really doesn't interact either way. On the subject of taxes, though, this does count as, the grant does count as taxable income. So you will generally get a bill from the IRS, not a bill, but you know what I mean. Yeah.
Just piggybacking off that. So in terms of calculating the payback period, though.
Yeah.
I might have missed that in the beginning.
We generally, our rules for REAP regarding payback period and whether you can consider those tax credits is that they can't be included because we're not totally sure that the business is going to be able to utilize them. Depends on their profits at the end of the year. So those can't be included. Generally, when it comes to payback period with us, it's only the value of the electricity that's being offset that you're credited back by the utility company. But that's fine because everyone's on the same level playing field. We make sure that all of our applications aren't including some weird thing that allows them that shows an earlier payback period. So, yeah.
I think we have time for one more question.
Okay, Kevin, how many applicants generally don't get funded? It depends on the year, and it seems to go back and forth for us for some odd reason. Last year, I think we funded almost everyone. And the year prior, it was like 75% of the applications. Typically, and in that year, in 2018, fiscal year 2018, I think we got something like 40 applications. We funded 30 of them, and the total dollar amount was between $500,000 and $600,000. So it's a pretty good success rate, I think, on applications if you're looking at 75%. But it just depends on what kind of funding we get, which we're never sure about. REAP's been around since the early 2000s, and at least as long as I've been in Washington, funding's usually consistent around that $500,000 mark. But it also depends on what kind of competition there is for the funds on that given year. 2018 bump was the Washington State Production-Based Incentive. There we go. Thanks, Jim. That explains it. That's it.
Well, thank you, Brandon. Very nice of you to come down here and give this presentation today. This is Patrick with Solar Washington. I'd like to thank Jack Newman and his colleagues at Sazan Environmental Services for hosting us this afternoon. Thank you very much to you all. And thank you to everybody who participated in today's webinar. We will post the slide deck as well as the audio file on our website very soon. I will send each of you an email to let you know where to find that on our website. So thanks to everybody involved with today's webinar. Have a great afternoon.